This is David Patrick, Fitzstock Charts, weekend market analysis for April 6, 2019. Charts while you sleep, week 14. We are in a 6-day uptrend. This is our fourth uptrend of 2019, and we are high stacked with profits again. We had 11 uptrends in 2018. We went all cash in October 2018. We waited for things to reset up. We didn't pick the bottom, and we just got paid. We had a 40-day uptrend early in the year. We had a 10-day uptrend. Now we're in a 6-day uptrend. This is when we make our money. I remain 101% long market exposure. 1998 historical chart pattern comparison. We hit it out of the park again with another price pattern that's repeating itself. I want to emphasize, we keep things simple. We don't use chat rooms. We don't gamble with event risk, with earnings. We don't have emotions, we don't have opinions. We use the rules of engagement. We follow the trend. Trade price pattern. And I skim for historical chart pattern comparisons, trying to give us an edge with everything. The website should be efficient right now. It should be fast, if not faster than originally. It's been enhanced. The video, audio, I think this is what I'm settling with. It's not perfect, but it is what it is. 2019 stats, 138 different stocks that have engaged. Long or short, 119 winners, 12 losers, 7 no scales, 86% winning percentage so far in 2019. Unheard of in the industry. Here's our 90% club. 1,030 different options that have doubled since we launched the service back in 2013. 288 options have tripled. Crazy, crazy, crazy statistics. Let's look at this 1998 historical chart pattern comparison that we just absolutely hit it out of the park again with. We can see we had the death cross, we had a death cross, we had a golden cross, we had a golden cross. We've been preparing ourselves every day for all of this. Cash, cash, long, long, right? I'm gonna try to get my drawing tools out over here. So right here is our golden cross in 1998, right? See if I can get my drawing tools out over here, just so we can all see what I'm seeing. All right, so over here, 1998, over here, 2019, golden cross, right? So where are we in the analog here? We don't know. We knew we were going to new highs on the year. We didn't predict that, but that was what the odds suggested. That was what price patterns suggested. We talked about it over and over and over. So what are we doing now? We're staying long versus our stops, at least until we break a 10 SMA or a previous day's low. We wouldn't even think about not staying long, right? Historically speaking, we've seen it happen the last 2 months, and we've seen it happen so many times since 2013. The market often hits a pivotal low the week before option expiration. Could happen Monday. Most of the time it happens Thursday, Friday. Does it have to happen? No. Have we hit it out of the park with the last 2 times it's happened? Well, let's look at that. Well, first of all, let's look at this price pattern. So at some point we are going to get toppy, and we're going to head into earnings season. So maybe we get to 2,900, 2,950. We're not going to pick the top, but when we get knocked out of trend, just like we did back in 98, that's when we start, playing it more conservatively. Let's see, flip to our SPX here. Let me change the time frame so we can see what's going on. All right, so we got our golden cross. We're getting up here. Our bogey was 2,900. We're filling some gaps in the chart. Do we go to new highs before we pull back? I don't know. There will be a pullback. Most likely it's going to be next week. Most likely it's going to be a slight pullback, and most likely it's going to be another buying opportunity. All right. With that said, stay long. So let's look at a couple things here. First of all, here is our 40-day uptrend in here, right? We went let's just point it out here. We want an uptrend right here. What did we have? We had MACD bull cross right there. And we had a bull flag, another bull flag, another bull flag, and we got paid. Then we got knocked out of trend. If you remember, I went, I think it only had 30% long market exposure when we got knocked out. And then what happened? I got aggressively long again. We got knocked out of trend, went down to 30% long market exposure. That Friday, actually, there's the Friday. Friday, what did I do? I bought spider calls, I bought UDOW, we had rules to engagement, and then we just went into a 6-day uptrend. And we've gotten paid fat. I mean, just really fat. We have, down here, we have our MACD bull cross, so that's confirming. So, once again, we're heading into a week where we have odds, let's just call it 60-40 odds. Odds are there should be at least some sort of slight pullback, maybe touch the 10 SMA. What do we have also coming up? We have earnings season. That's not the time we want to be aggressive putting on new trades. We want to be riding our winners into earnings. And if we are options traders, holding the winning trade, just risking the house's money. Profits only. We don't want to risk principal into event risk. It's not how we trade. We don't trade economic numbers. We don't trade non-farm payroll. We don't trade earnings. We don't trade event risk. So do not put on anything new, any new position, a couple days before earnings, 1 or 2 days. Sometimes I might miss something and let me know if it's on the ESFL and I missed the earnings date. But right now, we're not going to pick the top. We're going to ride the trend like we always do. We're going to ride it. All right, so let's look at the NASDAQ. Oh, by the way, let's flip real fast because we always talk about the higher time frame and why we stayed long during that last, I typed in the wrong symbol there, that last pullback. Because the weekly time frame, along with our historical chart pattern comparison, was saying stay long versus your stops. Now, I only stayed 30% long market exposure. Then when we had rules to engage in it last Friday, I went ultra long again. Here's the weekly, 10 through the 50. We hit with this uptrend. MACD's bullish. Everything's bullish. We're above the 10 SMA. We're in a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12-week uptrend on the higher time frame. So there's nothing on here that indicates a significant pullback is coming. However, we are heading into the week before OPEC, so we have to keep an open mind for maybe 1, maybe 2% pullback if we even pull back. We're not going to predict it. We're not going to predict tops. If we see a pullback, we hold the 10 SMA, we're going to look to reload on that support if we have to rules to engage, and we'll look for leadership on the way back up. Okay, so let's look at the NASDAQ. This has been our price projected zone now for many weeks. Actually, going back to February, I put that zone in because I thought we'd come and fill these gaps and slot back and forth. And this is exactly what we did. During this time frame, it's been great to be long the QQQ. It's been great to be long some FANG stocks, and we've hit it out of the park. Look at the 90% club. So there's nothing to indicate we're toppy here, other than the fact that we're obviously heading into the week before OPEC. So let's look at all futures. They continue to grind. They're very slow. 10 through the 200 SMA is coming. MACD is very slow. When we flip to that sector, the XLE, yeah, this has been very difficult to trade because it's sandwiched between moving average. There's no momentum. Is it looking good right now? It is. But, we're probably going to hit the 200 SMA. So maybe some stocks might be setting up in that sector. When we look at financials, we pointed out this wedge pattern. It's on the website what the wedge pattern is. And we're right slightly in the middle of a wedge with MACD's bullish. So can we get back up to the top of the wedge, 27.5? Absolutely. But reminder, we do have earnings season coming, so keep that in mind. IWM, small caps continue to grind. They're right at the 200 SMA. They might play catch up. I do like to see this leading. It's bull flagging above the 200 SMA. We do have that golden cross coming on the transports. That's a very good sign. IBB's in a similar wedge as the financials. We're just sort of grinding right above the middle of the wedge, MACD bull cross. So we'll continue to look for stocks that are showing relative strength in that sector. UDOW, we hit it out of the park with this. I went long UDOW here at 85 and change. And that's just a massive move right there. So pay yourself, scale, hold on to some, triple long. The Dow is paying. I posted that on Friday that I got long. It was a week ago. Gold, Yeah, we got gaps down below. This does not look great. I don't know if it's a great short setup. There's just not a lot of momentum. I would just avoid it for right now. Bonds, it's trying to fill these gaps. I'm bullish bonds over the next 6 months. We've had some nice trade in bonds. For a new trade here, I just wouldn't touch it. Okay, so what's going on with Apple? I mean, we've hit it out of the park with Apple this year. I mean, we went bull flag, bull flag, bull flag. What's going on here? This is just a tough new trade. I'm still bullish Apple. I'm still long 10% Apple. But look at this MACD. I mean, you got to understand something. Let me see if I can blow this up so we can talk about this. All right, you see that? It's slightly heading up. This angle right here, when it's separated from the red, is when we make our money. This angle right here, heading straight up, is when we make our money. It's nice to see that it's curling back up. We want to see it continue to grow, to maybe break new highs in the year. If Apple breaks new highs with MACD at new highs, that's going to be a really good sign of things to come with Apple. I'm staying long Apple. As far as for a new trade setup, I think we're just going to have to wait and see how this week takes place. Amazon still looks bullish. MACD is flattening out. So I think both those FANG stocks look fine, but we have to worry about momentum indicators. Netflix is just a grind to nowhere. Booking and Expedia really haven't done too much. Tesla, yeah, I mean, we got paid on the long here. I think they had earnings, stock gaps down. It's all over the map. Very difficult to trade Tesla over really the last year. We've had a couple good trades on it, but it's just been really tough to stay swing long or swing short. It's just been a large trading range. It's very difficult to hold on to anything there. Facebook continues to look phenomenal. This isn't another wedge pattern above. It's trying to get back above. So I think, maybe you get, if I can point my pointer to something like this, and then obviously the bottom of the channel. So I don't know. It's been tough to add on price strength time frame on Facebook. However, just like Apple, it is looking pretty good. MACD's heading back up. It is bull flagging here. So you have to give the benefit to the doubt, even though we're heading into the week before OPEX. Google, bull flag above the 10 SMA, MACD, bull cross. Yeah, I mean, these things look good. We just have to see price strength confirmation next week to this NVIDIA, just phenomenal. We talked about this forever. I mean, you could say head, left shoulder, right shoulder. You could say WV. I like this head, inverse head and shoulders pattern. We talked about this last year. Before this even happened, the bottoming process would happen with Facebook, Apple, NVIDIA. We talked about that last year. We waited. We hit it out of the park with all of those. Intel looks really good. It still looks like it wants to get the 52-week highs. For a new trade, we're going to have to wait. Texas Instruments looks very good. AMD looks okay. Micron, not so much. Avgo slowing down. OLED, that's a bull flag. That might be setting up soon to add. Xilinx slowing down. We talked about that MACD. It's just not a great setup for new long position. We have a great swing position from the ESFL. Microsoft dying out at old highs. Oracle. So we're starting to lose some momentum on some of these stocks that did lead us up. So we have to keep in mind there. Coop's starting to break down. That one might actually be setting up short. Now holding the 50 SMA. CRM, Workday. These are some big flyers. So if I have to make a note, some of these beta stocks, if we do pull back next week, could lead the way back down because they haven't been participating on new highs on the year with the indexes. So let's keep that in mind. That would actually be good if they led the way back down and rebounded the most. Jobs looks really good. Splunk, not so much. FF5V. So yeah, some of the FANG stocks, FF5V looks okay, but it's sandwiched between those moving averages. For new setups, it's going to be difficult so far from what I'm seeing. Let's scan a few more and see what we see. Let's go to BABA. BABA actually looks very good. Baidu continues to look very good. Those both look good for next week. Workday, CYBR. Yeah, that's been a big leader, and that's setting up actually short, which is interesting because we're on a 6-day uptrend. Panwa, VMW, and eBay, Vive. I'm not seeing a ton of new. Let's see. YY I like. NTES. NTES looks phenomenal. That did pay from the ESFL, and YY looks good. BABA looks good, and Baidu. So those three in that sector look pretty good. Let's see. Does GoDaddy look sort of slowing down? Wix is slowing down. Let's flip to the banks. Are they telling us anything? No. They look very slow, lethargic. They're back in the wedge. Some of the leaders in that sector, Visa and MasterCard, they're even starting to slow down. BlackRock. I tell you what. This is interesting because if this gets above here, this could be a nice swing long. I know BlackRock actually failed once on us. I think, yeah, I have it on my sheet. Goldman Sachs and BlackRock both failed once on us, and Bank of America. Well, sure, 3 failed bank stocks this year. The techs certainly haven't failed us. But if that ever does get back above there, it really could set up swing long again. We'll revisit that if we see that. CBOE doing nothing. CME we talked about. Short squeeze to test this. Once it tests that, we're going to see what happens. Are we going to create a lower high, a higher low, a double bottom? What's going to happen? We're not going to predict. We're going to wait. And then if that happens, we're going to see how the pattern that develops, whether it's a higher low or double bottom, and see if we can get a WV or inverse head and shoulder. See if we can get a bottoming process to give us a trading edge rather than to try to pick a bottom, because that's not how we trade. We don't pick tops and bottoms. COP, no. PSX looks okay. I mean, these look like they might have small short squeezes, but they just don't look that compelling. CVX looks all right. Exxon probably looks the best. The problem is you're going into this gap fill on Exxon, so it might have a couple more dollars. It's probably going to slow down. That Diamond Offshore does look pretty good, doesn't it? So that could be setting up. Marathon, Oxy. Oxy looks decent. So look at the casinos. Yes, we did get paid on this one. This still looks bullish. It could bull flag and retest this 10 SMA before we get to 150, 160. Another great swing long from the ESFL many times over the last couple years and most recently over the last week. So congrats if you took that. Las Vegas Sands looks really good too. Let's look at cannabis, Tilray, or at least a couple of these that we traded in the past. Tilray's coming up slow here. Let's see, CGC. Yeah, that's okay. You can make these flat prices back above the 10 SMA. I don't know why this Tilray is coming up so slow. Yeah, there's not much really to say on this Tilray. I mean, we're not getting, this continues to grind lower and not really setting up long. What about Kronos? Yeah, so I don't really like those. Those are momentum trades. Obviously, if anything, you concentrate on the short side because they're in downtrends. But for new long setups there, I don't like. Let's look at IQ, nothing. Docu, nothing. What about our new Lyft stock? Yeah, well, we talked about this. If you're going to trade it, and we talked about this in the last video, use your 5-minute rules of engagement. And we talked about changing, let's see, time frame to, let's go 10 days. And these, remember, I kept the drawings up from our last video. We said you could take this break of a downtrend line and get long here. Your stops are here. This is very difficult to look at a daily chart. You got to look at a 5-minute chart, right? And you could start day trading more on the long side because now you have defined risk. You're no longer, picking a bottom. And all of these trades, 1, 2, 3, paid very nicely. Now you're coming into a gap right now, and so once it gets up here, you might see some volatility pull back. But this looks good up to 70. Maybe 79 bucks. I doubt it's going to be on the ESFL. It's more of a shorter term trade. I'd like to see it come up, rest a couple days, and then it might show up on the ESFL. But that's been a great day trade. If you were trading that using 5-minute rules of engagement, you really got paid. And we talked about that last week. Okay, Amgen. Wow, this is finally starting to look good. Guild, that looks decent. Alexion, come on. I mean, it's slow grind. ISRG, REG end. Wow. Aluminum. Aluminum looks pretty good. LGN. That looks good. There's some stocks in the biotechs that are actually waking up. CMG, sort of just grinding no man's land. UBNT, another bull flag. Be careful about adding up here. You have new highs on this bull flag without MACD. That's a tough trade. This is a bull flag right here that we took with MACD at new highs. You have bearish divergence here. That doesn't mean it's bearish. It just means it could be a more difficult long to add. So just be careful with that. Okay, so we are, what, 20 minutes in, and we're not going to make this video long. But in summary, what do we have going on here? We're in a 6-day uptrend, our 4th uptrend of this year. We had 11 uptrends last year we got paid on. This is when we make our money. We're going to stay long. And I talked about what am I staying long versus? Friday's low. Very simple. Friday's low is my stop. If I get stopped, I'm getting stopped at break even on runners, right? So we know where our risk is. We know that the last 2 week before option expirations were here. That was a pivotal low. Here, that was a pivotal low. Are we saying that the market has to pull back this coming week? No. We are saying if it does pull back, most likely it will be contained, and most likely it will be another buying opportunity. That's what we're saying. That's all I got for you. Charts Where You Sleep, I think it was week 14. Have a great weekend.